This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. All right, to the markets we go, where futures are advancing. This is ahead of more economic data out today at 8:30 Wall Street time. We'll get May housing starts and also initial jobless claims for last week. We have NASDAQ futures up 0.6%, S&P futures up 0.4%, Dow futures little change, up about 34 points. We head over to the 2-year yield at 4.73%. That's up 1 basis point. The yield on the 10-year 4.24%, and that's up 1 basis point. We have spot gold higher, $2,339 an ounce. Brent crude $85 a barrel. WTI crude $81 a barrel. Companies making news. We'll start with Boeing. Their shares down about 0.5%. Families of the victims of 2 fatal 737 MAX crashes are asking the DOJ to fine the company almost $25 billion. And you have CDK Global. Good news here, it's restored that dealer management system after a cyber attack. It brought thousands of car dealerships to a halt yesterday, stopping those car sales. And so since we're talking cars, Ford, its recall problem so bad that its CEO said it's delaying new vehicles. Jim Farley said the company's going to hold those newly designed models for up to 6 weeks to perform extra quality checks. Those shares are a little changed right now. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, Mateo, thanks so much. We got a nice equity touch today. We got to do equities. I mean, people are starting to talk about it finally. Cab drivers are like, right. I get in the car, they're like, Bloomberg 1130, do you own NVIDIA? I'm like, no. There it is. We talked to someone who's been here before in his childhood and, of course, all of his work. He's legendary in the street, Sam Stovall from CFRA. And this is where you gauge 4- and 5-star stocks. Sam, are the big tech stocks 5-star or 4-star or worse?
Well, good morning, Tom and Paul. Actually, the tech stocks, big tech stocks, are 4 and 5, depending on whether the analyst wants to bet their bonus or not. But they go along with the good news in that AI has been the driver for tech and semiconductors in particular, and EI, earnings and inflation, has been the driver for the remainder of the market.
Sam, are you concerned that we're talking so much about AI here? It feels to a lot of folks frothy, toppy, just thinking about this market here. Do we need more breadth?
Yes, we do. The good news is that the S&P is up 15% through the last Tuesday. It has set 31 new all-time highs. The NASDAQ has set 29. And of the top 10 years with the highest all-time high count since World War II, and this one is number 6, the S&P gained an average of almost 22% in the full year, rising 100% of the time, and we had a second half gain averaging 5%. That's the good news. The bad news is that of these top years, a majority of them had at least one decline of 5%, and many of those then had a second decline. So would not be surprised in the slightest if we have another decline of 5% or more. One reason is because valuations. The S&P is trading at a 33% premium to its average PE over the last 10 years. Growth is at a 57% premium. Tech is at a 77% premium. So my feeling is that, we need to reset the dials so that this bull market can continue.
Sam Stovall, that was beautifully explained. Why are they at that premium? What's the why?
I think the why is because we are, people say, well, what inning are we in as it comes to AI? And my feeling is we're still in Little League. We've got years to go in terms of AI development. Expectations are that more than $1 trillion will be spent over the coming 10 years for generative AI. We're likely to see 20% growth per year in terms of data storage and the power that is needed to supply that, et cetera. So expectations are incredibly high for what the growth potential will be for AI and AI-related areas.
Has this AI-driven bull market, Sam, has that created valuation concerns in your perspective?
Yes. As I mentioned, the concern is that PE average, PEs right now versus their averages are excessive for the market itself, for the growth portion of the market, for tech itself. So I really am of the mindset that we do need to reset the dials. Unfortunately, PE ratios are not a good timing mechanism, but if you also look at by how much is the S&P above its 200-day moving average, that's more than one standard deviation from the mean and getting into nosebleed territory.
Outside of AI-driven technology, Sam, where do you see opportunities for equity investors?
Well, one area that I like is aerospace defense, not because I'm promoting Boeing, but rather an area like XAR, which is the aerospace and defense ETF. We do like GE, four-star stock. Now that it's spun off its Vernova group, it's basically an aerospace pure play. Also General Dynamics, basically because of the aftermarket, because the airplane. Go ahead, Tom.
I don't mean to interrupt, but he sounds like Robert Stovall. Sam, hearing you talk about General Dynamics brings me back to the iconic work of your father. Are defense stocks contract to contract? Are you worried about lumpiness there in revenue stream?
Well, there could be, a bit, because when you look to a company like GE or General Dynamics in particular, 20% of its revenues and long-term growth comes from aerospace. 30% comes from marine systems, and we expect to see an improvement in combat systems, which is at 20% exposure, and then technology at 30%. So yes, there are different pockets for these companies, and some have better growth potential than others.
So how about energy, Sam? I'm looking at WTI crude oil. We're back above $80 a barrel at $81.70. What do you think about energy here?
Well, energy, in a sense, we've been playing whack-a-mole with them for a while. So what I mean by that is we haven't made the best of calls. We've either been market weight or overweight. Basically, the concern is that starting in October of this year, OPEC and its allies, Russia, Mexico, et cetera, are expected to be unwinding nearly half of its projected cuts through December of 25. So the feeling is that there's going to be more and more supply that's put onto the marketplace, and we think that could end up putting pressure. But if China starts to pick up again, well, then that could mop up a lot of that supply.
Sam, we got to get you into the studio. I mean, what we'll do, we'll hand out value lines. Lisa will have a value line. Sam will bring his in. I've got mine at home. The value line, for those of you a bit younger, is like 12 inches thick. And you put it on the floor, because that's just where it always ended up. And you trip over it about every 6 weeks and put a coffee in orbit and that. Sam Stovall, thank you so much. Greatly appreciate it, with a star system of S&P and CFRA. Just a vignette to the past, folks. Everything I ever did was cross-checked against the star system.
Yeah.
I didn't move on anything.
Yeah.
Without looking at it.
If you did not have access to, broad Wall Street research, the S&P work on stocks, the tear sheets, having to replace the tear sheets when a new tear sheet came out. You had to open up the 3-rig binder, take out the old one on GE, and put in the new tissue paper tear sheet on GE. And that was good for another 6 months.
The cruel thing was to walk around with the latest value line rolled up in your hand. 45, 50 pages of onion skin.
Yep.
And I remember that the day, folks, where value line went to logarithmic charts, that was like a sea change from out of the past. Anyway, Sam Stovall there in the equity markets. Anastasia Amoroso will join us here in a bit. Linda Dussel from Pittsburgh and Federated as well. Futures up 21. NASDAQ up 0.6%. Those levels, 5,500 coming up on 5,600 on NASDAQ, S&P futures. Dow can't get to 40,000. Good morning, Boeing. Good morning, Seattle. NASDAQ futures well over 20,000. I think it's a bull market.
Yep.
We can say that. Stay with us on YouTube with our live chat. I haven't even got on it yet. I've been so busy. Good morning.
Bloomberg Surveillance is brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. NASDAQ futures leading the charge this morning, up about 0.6%. S&P futures up 0.4%. We have Dow futures little changed, up about 36 points. The two-year yield at 4.73%, up 1 basis point. The yield on the 10-year 4.24%, and that's up 1 basis point. Some companies making news. We'll start with Eli Lilly. Their shares are up about 0.1%, but it's broadening its crackdown on those knockoff versions of its popular obesity drug Zepbound. The company says it's filed a handful of new lawsuits today. To earnings we go. Darden Restaurants, you know them, they own chains like Olive Garden, Longhorn Steakhouse, reported guidance that missed estimates, but its shares right now up about 1%. And since we're talking restaurants, McDonald's, well, they say they're kicking off that marketing campaign on Tuesday for its $5 meal deal. Yes. The company tells Bloomberg it's committed to winning the value war. $5.
Sparta called me up. He said lunch, McDonald's.
Yes.
he thinks we can get this out for $11.47. What do you get for $5?
You get the burger. The burger, the fries, the drink. That's a pretty good
like
deal.
A normal burger.
Yeah.
No, this is. I think you get the chicken.
Oh, it's a chicken.
It's a chicken, fries, and Coke.
Okay,
Yeah.
So the chicken, not the burger.
How do they
Chicken's
do that
cheaper.
for $5?
Chicken's
It's all about
cheaper than
volume.
It's like marketing. I mean, it's like an
Yeah.
image thing to
Yep.
America.
Get you into the store and
to
they'll
say
you
we
some other
care.
stuff.
And,
Yep.
and all that. You think Tracy McMillan will be lining up at McDonald's?
Definitely. Why not? Why wouldn't you?
Let's find out. Head of global asset allocation at Wells Fargo, their restaurant analyst, Tracy McMillan. Tracy, what does it say about revenue, unit dynamics, and price dynamics that in our most basic food, we're launching loss leader lunches at $5 per unit? What does that signal?
Yeah, Tom. So I think what that signals is that we're seeing weakness in the consumer, especially in the consumers in the middle to lower quintiles of the income spectrum. And, this is something that we have been anticipating, that the consumer would soften, that growth would soften through the middle part of this year. The Fed will be able to cut rates probably a couple of times, and then that should allow growth to stabilize and perhaps move a bit higher by the end of the year. So kind of a saucer-shaped slowdown, soft patch here through middle of 2024.
Surveillance junk food correspondent Michael Barr says it's a choice of McChicken, McDouble, or 4-piece chicken McNuggets with a fry and a drink. I think you get one French fry.
Perfectly. Exactly. That clears things up. Thank you, Michael Barr. All right, Tracy, global head of asset allocation. Am I 60-40? Am I U.S. versus non-U.S.? Give us kind of the 30,000-foot view from Wells Fargo.
Sure. Yeah. So, of course, your allocation depends on your risk tolerance, but we do think that the 60-40 or diversified portfolio should do fairly well here, given the current positioning that we have in our portfolios. We think that that equities are probably a bit high at this point, and bonds are actually longer term bonds are actually sitting pretty close to the low end of our yield target this year. So what that means, we think, is that you stay up in quality. We continue to like large caps over small caps. We like U.S. over international. And within international, we think developed markets are a more attractive place to be than emerging markets.
Editor's note, Paul, do you note a trend here that these really smart people, our guests, are really capitulating to U.S. over international, large cap over small cap?
Yeah.
Is all my radar up or what?
It is. It is. I mean, there's. I mean,
Rich,
you look at.
Can you find somebody that disagrees with Tracy McMillan?
Exactly. So, Tracy, I mean, here in the U.S. here, we've been talking this morning about NVIDIA and AI, and we've had a big buy-side institutional shop come on and say they're all in on AI. They're overweight that stuff. They're not afraid of the valuation. How do you think about some of those big tech stocks versus the other 493 stocks in the S&P 500?
Yeah, we do think that a lot of the run up is obviously been concentrated in a very narrow set of names, and so what that is doing is making us a bit nervous because we do feel like we need some breadth, some broadening out in order for this rally to continue. Well, we could be just one negative earnings report away from a pull down if we don't start broadening out some. So as far as AI goes, we do think that the technology names are expensive here. So we would be pairing some gains, holding a neutral allocation to information technology and to communication services, two of the best performers so far this year. We would be moving into those sectors that could have ancillary benefits from AI, like energy and materials and industrials. We also like healthcare.
So healthcare is interesting because you think about all the data, all the structured data that's in the healthcare system. You think about all the information we give to our healthcare providers. What's the AI play there, or what's just the play in healthcare from your perspective?
Yeah, so the play in healthcare, it has a lot to do with valuations, but it also has to do with a number of the new drugs that we're seeing those companies come out with. And the AI perspective within healthcare is really interesting because there is a lot of data in healthcare, but that data is very fragmented in the US at this point. So they will have to figure out how to bring some of that data together before we'll start to see we think some really significant gains from AI, but that is a sector where we could see some tremendous benefits from that technology.
Tracy, a really important question. In your head, I don't need, some fancy answer, but in your head, as yield comes down, as some predict, when does the rush come out of money market funds? Is it 4.99? Is it something lower? Where in your head is a tip point on yield for money market funds?
Mm-hmm. Yeah, so I think it's much lower than 4.99. I think it's probably going to have to be in the threes before we see money actually moving out. Because in the threes, cash is still getting a real yield above inflation. And as long as it's getting that real yield, I don't think that money is going to be rushing into other asset classes.
So Tracy, just on the fixed income side, Tracy, a lot of folks are saying, why do I have to do anything more than park my money in a 2-year treasury? I'm getting close to 5% here. Is that the play in fixed income, or do I take some, credit risk?
So we think that investment grade continues to be a more attractive space because we are concerned about credit risk, especially if the economy starts to slow, and we are seeing signs of that through the consumer. We also think that shorter term is a good place to park money, but we're parking it in anticipation of better entry points into the equity markets or the opportunity to extend duration if we see yields move back up. We'd like to see them towards the top end of our range, though, before we'd be extending duration. And on the 10-year, that's about 4.75.
Tracy McMillan, thank you so much. She is with Wells Fargo, head of global asset allocation. What do you think of all that, Paul? I mean, I still don't understand, and I think it's the new distribution in fractional shares and ETFs, the Balchunas world. Is Balchunas with us this week? Or is he still on the grand tour of Europe? Tell them, get the phone out. We'll take him on one of those canoes they have in Venice. but I'm sorry, it's a different world.
It is.
It's not like people talking about General Dynamics.
No. I mean, I think, when you get somebody to come in here and talk like a BlackRock, for example, a small little financial institution, talk about how they continue to be all in on AI, that tells you all you pretty much need to know about this particular market right here, which has been really for the last 18 months driven by that big tech move.
The VIX, 12.58. I'm looking at 10-year real yield, 2.02%, still within the range. He's always home on the range. Our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. South Korea's presidential office has condemned an agreement reached by Russia and North Korea that vowed mutual defense assistance in the event of war, and says it will reconsider its policy of limiting its support to Ukraine to non-lethal supplies. The comments by a senior presidential official today came after the office issued a statement condemning the agreement reached by Russian President Vladimir Putin and North Korean leader Kim Jong-un in their summit in Pyongyang yesterday. The office said the agreement posed a threat to South Korea's security and warned that it will negatively affect Seoul's relations with Moscow. An American soldier has been sentenced to nearly 4 years in prison in Russia. The charges against Gordon Black involve an alleged altercation with his Russian girlfriend. Staff Sergeant Black was detained in May after traveling from his base in South Korea to Russia without permission from the military and without heeding the strong warnings about travel to Russia from the U.S. State Department. Melody Jones is Gordon Black's mother.
Like part of my heart's been ripped out and it can't be replaced until he comes back.
Jones says she warned her son not to go to Russia. Boeing 737 MAX crash victims' families are asking the Department of Justice to fine the company. Bloomberg's Ed Baxter has the story.
In a letter to the DOJ, they're asking for nearly $25 billion, saying the amount is legally justified and clearly appropriate. The letter comes a day after Boeing CEO Dave Calhoun faced a grilling in front of the Senate subcommittee accused of having a broken safety culture. The letter says $14 to $22 billion of the total amount could be suspended if Boeing were to devote those funds to an independent corporate monitor and improvements to its safety programs. The attorney representing the family said they deserve some payout as well. Ed Baxter, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Thanks so much, Michael Barr. Paul Street's out in the zeitgeist today. Thanks to Jim Cramer over at the Death Star for bringing it to my attention. Jim's dead on. He just says the Wall Street Journal's percolating.
Yep.
NVIDIA's a new Cisco, and Cramer clearly says he doesn't think so. I agree with Jim Cramer. I just don't see the parallel.
Well, here's what's different to me just a little bit. I was looking back at the Oracle, and I mean the Cisco chart back from the 95 through end of 1999, the peak of that thing. It went from $2 to $77. But you look at NVIDIA, on a PE basis, trailing 12 months, 79 times PE. 1 year forward, 50. 2 years forward, 37. So it's earning its way into this multiple because it's earnings, not its revenue. Its EPS is growing so rapidly that it earns its way into its multiple. And I think from a valuation perspective, that's what a lot of the bulls are saying. Hey, this is real earnings, real free cash flow, and they're willing to put a big multiple on it there.
You know, I'm looking at EBITDA margin here, and I'm sorry, Cisco was making 28, maybe 20 cents on the dollar. It's not the profit juggernaut that these newer companies is different than what we knew in 1999. Cisco back then dropped 82%, 82%.
Yeah.
I think it's on a weekly chart as well.
No, but
I just don't see it.
You know, but I think when you think about NVIDIA, you know, one of our guests said just earlier, Tracy McMillan from Wells Fargo, maybe, you know, it's one earnings miss away from pulling one of the legs out from this NVIDIA story, but they have not had an earnings miss or forecast miss in really 5-6 quarters here.
I did a study Tuesday of it's gone up so fast. How big a pullback is to the bottom of the range, and it's shocking. It's like, I don't have the numbers in front of me, but right now if NVIDIA went down 30%, it'd still be within range.
Yeah.
That's how fast it's gone up.
Yep, it's just been extraordinary. And it's just been, I think if you ask the person on the street for an AI play, even if they don't know what AI is, they would tell you NVIDIA.
And, of course, full disclosure here at Bloomberg Surveillance, I'm pleased to tell you that there isn't a damn share of NVIDIA within the entire Keene clan. Vet Bill sold it out 3 weeks ago. He's looking at a condo in Coral Gables. That's it. And do you own, I mean...
Well, through my mutual funds and all that kind of stuff.
Mutual funds and that.
Yeah, I mean,
you know, Mateo...
Will Danoff is long NVIDIA, which is good for me.
Yeah, Mateo, it's like picking up a gold bar at Costco. She picked up a share of NVIDIA in aisle 3 at Costco a couple of years ago. It's going to be an interesting day. We've got some good equity coverage coming up. Stay with us. This is Bloomberg Surveillance.
Now...
the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are in the green. We have NASDAQ futures up 0.5%. S&P futures up 0.3%. We have Dow futures. They're a little change, up about 25 points. The 2-year yield at 4.73%. That's up 1 basis point. The yield on the 10-year, 4.25%, and that's up 2 basis points. We'll take a look at commodities. We have spot gold higher at $2,340 an ounce. Brent crude, $85 a barrel. WTI crude at $81 a barrel. Some tech news. Citigroup says artificial intelligence, well, it's going to displace more finance jobs than any other sector. A report by the firm, it predicts more than half of jobs across banking could be automated. And companies making news, MGM Resorts International up 1%. It said it plans to offer online betting with live dealers that are based at 2 of its Las Vegas resorts, the Bellagio and the MGM Grand. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Paul, Sweeney, and Tom. How are you doing on the heat? You said the wind came in nice?
On the Jersey Shore yesterday, it was chilly because the wind was coming in off the water, and the water was 59 degrees yesterday.
Yeah.
I don't know what's going on with the ocean.
It's called June. It's just not summer yet, and you see that at the ocean. But inside, I mean, this is
crazy.
Folks, you got to stay with us right now, and on YouTube particularly. In 10 minutes, we have the jewel of Rob Carolyn joining us. He is our Bloomberg meteorologist, and he is a king of no hysteria. I've been really looking forward to talking to Rob. Where he lives, it's temperatures I've never framed in my mind.
Because he's up in New England?
He's up in northern New England.
Yep.
And way up in Maine, like on the border with New Brunswick, like you can hear the St. Lawrence Seaway in the distance. It was 95.
Wow.
Above the potato country.
Yeah, they're not used to that.
And at Millinocket Lake in Mount Katahdin, like, you know, LL Bean, Maine, there's bar in the woods. Don't play with a moose.
Right.
It was like 93. What's that about?
Yeah.
We'll have to see.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The Lisa Mateo Show, your daily look at the front pages around the world, brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. And all of us, even Lisa Mateo, thanks Interactive Brokers for their commitment. What do you have, like 15 stories to choose from today?
It was a tough one, I know. Yeah. Okay, now before I get to the story, I want to set the scene with a popular song that you once played here, Tom, on this show. Stay tuned.
I'm looking for a man in finance, trust fund, 6'5", blue eyes, finance, trust fund, 6'5", blue eyes.
Ah, yes, I love this. It's because it's about the finance bros. They're not 6'5" or they have blue eyes, but they are sparking a popular dish specifically made for them at Chipotle, okay? It's called the Chipotle Boy Bowl. It's double chicken and it's white rice. Okay, and it's Chipotle says it's specifically for them because they put out this post and
it's for finance guys.
Yes, it's for finance guys. It's called the Chipotle Boy Starter Pack because they showed a picture of it on X and it had aviators, AirPods, MacBook, a glove box full of Chipotle napkins, and yes, the popular puffy vest that apparently they all wear.
So Sassauer wears that. It's
July.
Vest. It's like a heat wave, and Damien's in the Patagonia puffy vest.
So they're saying these guys have sparked an interest in this particular bowl with the double chicken and the white rice. So they decided to make this limited time edition just for them. But you have to go to the app to get it. It's the only place you can get it.
But, you have to be digital to get it.
Yes, you have. You can't. Yeah, it's not on the menu posted in the restaurant. Nope. You got to go in the app.
What's
and get
it called again?
It's called the Chipotle Boy Bowl.
The Boy Bowl.
For the finance bros.
They didn't call it the Trust Fund Bowl because that's what you have to go. You go to Sweet Greens to get like 4 meals for the kids. You need a trust fund.
Yep, exactly.
To check out. Next.
Not for that. This one's a deal.
I like the music. Do that more often.
I know.
Can you give us that beat again?
He likes it. It's a good little, All right. Personality hires. This is the latest workplace trend. So they're going away from skills and they're going to personality. So what we're talking about with personality hires, those have like that certain charm, that je ne sais quoi. They know how to talk to people. Yes. They're warm and fuzzy. They're saying because camaraderie is hard because of the hybrid schedule. So what's happening is that it's causing this animosity animosity with the coworkers because they're saying they have to pick up the slack for these personality hires because they're not doing enough work. So it's this tension now in the workplace that's happening because of these. I'm trying. I see you're trying to hold your tongue.
Can we do the show next week from HR? It's a sensitive topic, to say the least.
Correct.
And I would say it's out in the literature. It's amazing how there's a lot of major shout out to Stanford University, who's really thinking about this, but there are many, many others. I mean, there's a lot of cross currents here.
Okay.
In the dead of summer as we go to the launch of the business seasons. You're killing me here.
I know you're.
Can I do a remote? Can we do like if I'm up in HR? Can we do a Zoom remote for the show? Lisa, go away. What do you got next?
Okay, Taylor Swift. She's sparked. Everything. When she's at football games, the ratings go up. When she's everywhere, everything sells out. She's helping out the economy in certain countries. Yeah. Okay. So now the Washington Post is saying TikTok is building this entire in-app experience around Taylor Swift. So users, they can get these digital profile frames. They have these in-app friendship bracelets. And if you complete certain tasks, you get the all limited edition Swift-themed profile frame that everyone wants.
From your prism, and we cover this, I think, on Tuesday as well, where the social influencer thing sort of is off the bloom. Are the kids as glued to the social influencers like they were a year or two ago?
Oh, most definitely. I mean, that's how, I hate to say, but that's how my daughter gets all her beauty products is from watching what these other people post. But it just goes to show you that they have the influence. Swift has more than 32 million followers on her TikTok account. Right. But it does spark this cause for other people to buy products or to want things that they want. But here's the thing, you have music producers who are saying that it's taking away from the emerging artists who are trying to get on TikTok. But, I mean, emerging artists, Taylor Swift, it's hard.
I remember, I had the clearest memory when she was an emerging artist. I mean, people forget that she was there. She did a thing. She was, Paul, I think 16 years old.
Amazing.
And came out, Def Leppard's playing, and this tall blonde girl comes out from the back. No one knew who she was. Who is this? And she had one country hit or whatever. And she was literally, I think, 16. And it was...
And that's how it started.
To see her and Joe Elliott work and the rest of Def Leppard, it was like, who is this? This person is different. That's it. The newspapers today. Lisa Mateo there. And we'll have much more on that into the heat wave as it is. Eric, can we go to Mr. Carolyn now? Is he dived in? Rob, I've been dying for 5 days to talk to our Bloomberg meteorologist. Rob, let's just begin with the potato fields of northern Maine. Can I make the statement they've never seen heat like this on the road to New Brunswick?
They've seen heat like this, but you'd have to be back in 1906, 1907.
Okay, well, why are we back to 1906 and 1907 as a nation?
Well, because we've got this big Bermuda high that has set up, and it's stretching from Bermuda all the way to Missouri. Typical warm, humid pattern. Yeah. Lots of warm and humid weather coming up from the Gulf all the way to the Canadian border and beyond this morning.
But is it typical, is it overplayed by the media now? I mean, Rob, you're the king of non-hysteria. Yes. Is it overplayed by the media, or are you focused on how original this is?
No, it's being overplayed. Let's put it this way. In 1906, Nashua, New Hampshire hit 106 degrees, and it was a stretch of about 10 days where it was above 90 and several where it was above 100. Yesterday, Boston did break a record at 98. The old record was set back in 1926, and it was 96. We did not see a record yesterday in New York. We did not see a record yesterday in Washington. So it's hot, but it's not exceptionally so. It's just something that gets played up more now to kind of get ratings. And last summer, we didn't have this. We were cool. We were wet. This summer in the Northeast, we're looking at temperatures running 2 to 3 degrees above normal for the month. So it's something we haven't had in about 2 years.
When, Paul, in the old days, when there was a heat wave like this, your dad gave you a closed Jenny cream ale can and you put it on your head to cool down.
Exactly. A little different here today. Rob, is it, I guess what's getting some people's attention here, at least in the Northeast and the metro New York area, is it feels like All right, we expect these things, this type of weather in July, but boy, it's just kind of mid-June here. That seems a little surprising.
It is. It's early. And why is it early? Because the ocean is warm. Because we didn't have a whole lot of cold air last winter, water temperatures in the Atlantic and the Gulf of Mexico are above normal. It's easier for us to get warmer early in the season. Today being June 20th, today is the day of the summer solstice. The sun is no stronger than it is today, and the day is no longer than it is today. So if you can get a head start with the ocean being warm, you can get temperatures in some portions of the Northeast up back close to 100 today like they were yesterday.
It's astronomy day. Like the full moon is coming up here, and the moon angle is so low. It's like almost behind the skyscrapers of New York City. It's like the Christopher Cross song from years ago. Rob Carolyn, let's get serious here. A friend from New Jersey says, tell me about hurricane season. That's all I care about. Are we going to see more storms?
We are. Everything except one thing is pointing towards above normal activity. We're going from an El Nino into a La Nina. That should enhance activity. The Caribbean is very warm. The Atlantic main development region, Central Atlantic, is very, very warm. The only thing pointing to the season not being quite as busy would be the fact we're working our way into a solar maximum. Anytime you look at the charts of a solar maximum on the rise, you actually see a decrease in tropical activity. It's believed that solar activity increase stabilizes the stratosphere and prevents the storms from developing. So that's going to be interesting to see if it does play a role in this season's development.
And just remind us kind of what is, I'm not sure if it's changed, what is hurricane season these days? How do we think about that?
Well, we think about it being pretty destructive because the warmer water temperatures have led to stronger storms. The big change I've seen in the last 30 years, Paul, is the storms have the tendency to develop much more quickly. Where it used to take them a week, 10 days, if they were in the Central Atlantic to get to a Category 5, now they seem to be able to do it in 2 or 3 days. And that's very alarming because it doesn't give folks as much time to prepare for really destructive systems.
Really appreciate it, Rob Carolyn. Busy, busy day for you, and really thank you for the time. He's our Bloomberg meteorologist. Just definitive on the non-hysteria, which I think you saw there, and it may be the heat index.
Right, exactly. That's how we do it.
The heat index.
The real feel.
You know, and I don't know, it's like in our youth, he went back to 1906, seriously. I mean,
yep.
It's something back there, but I guess that's all you can say. Rob Carolyn, thank you so much. Dollar stronger here right now. Some interesting foreign news. Over the last 48 hours, a Japanese bank came out and said they have to start selling bonds. They will sell those at a loss. Thank you to Bloomberg reporting on that in Tokyo. Everybody watching yen here out to near 170 on euro yen. That's an important pro level as well. And on sterling, 126.79 off Bank of England. Really not much of a change. Euro, 107.13 in betweeny, I'll say. And to me, the real news is renminbi breaks through a 7.25 to a weaker yuan 7.26. From New York City, this is Bloomberg Surveillance. Please stay with us here. We've got some good guests coming up at the top of the hour. Paul's favorite, Torsten Slok.
Oh yeah, there we go.
He'll tell you about it in a minute. It's Bloomberg Surveillance. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, and Lisa Mateo, and a terrific hour coming up on equity markets with the futures lifting. We're going to get right to it in this half hour. Torsten Slok of Apollo Global Management with us for the entire blocks of this half hour. Really looking forward to that. Futures up 19. Bloomberg Surveillance this morning brought to you by Cohn Resnick Advisory, Assurance Tech. See how business strategies from the world of golf can help your company build competitive advantage. Watch the Business of Golf series at cohnresnick.com/golf. Right to it, our Bloomberg Business Flash. Here's Lisa Mateo.
Good morning. Yeah, futures advancing after the market holiday. We have NASDAQ futures up 0.5%, S&P futures up 0.3%, Dow futures, they're little changed, up about 19 points. The 2-year yield, 4.73%. That's up 1 basis point. The yield on the 10-year, 4.25%, and that is up 2 basis points. European stocks, they started to strengthen after the Swiss National Bank delivered an interest rate cut. The BOE maintained its key interest rate at 5.25%. We have the stock 600 up about 0.5%. NVIDIA shares, they're higher. They're up another 3%. The world's most valuable company extending its lead over Microsoft and Apple. And then you have shares of Dell and Super Microcomputer. They're on the rise. We have Dell up 3%, SMCI up 4%. This is after Elon Musk said in a post on X that the companies are going to provide server racks for the supercomputer that his company XAI is building. And finally, Advanced Micro Devices up 1%. An investigation found that recent cyber attack that they had, well, it's not going to have a significant impact on its operations. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Of course, what we love about YouTube and the live chat is we channel in on what's important. Go Spiders. Paul, explain your shirt today. University of Richmond.
Yeah, University
Spiders.
Undergrad, University of Richmond. Great class of 1986. So good school down there in Richmond, Virginia. Had a lot of fun down there.
It's a really, really interesting program. I had to happen to have an offspring go there. They have a dance junior year.
Yep.
That you are forced at gunpoint to go to.
Sure. Yeah.
And
there's some good old traditions down there, Southern traditions down there.
Good morning to the University of Richmond and all of Richmond, Virginia. Joining us right now, Torsten Slok, Apollo Global Management, hugely read on Wall Street, of course, off of his iconic work at Deutsche Bank as well. Torsten, 12 months forward, where's real GDP?
I still think it's strong, but I do think that the weather report you just had with still mildly hot economy, mildly hot weather, but with the risk that we may have some slowdown coming, maybe 12 months, but more 18 months into the future. The fear you can have is that higher for longer ultimately begins to bite harder on levered balance sheets for consumers, on levered balance sheets for firms, and levered balance sheets in the banking sector. And that could potentially create that dreaded recession that we've been worrying about for so long. But so far, for the next several quarters, we still think that the tailwinds to growth are very strong from fiscal policy and from easy financial conditions.
Torsten, you've been pretty consistent here in your call that this Federal Reserve doesn't really have to cut rates in 2024. Do you still believe that? And if so, why?
I still believe that because what I think, the first test is, well, if we literally just quote unquote look out of the window and see how are things going in the incoming data, non-farm payrolls at 272,000, that's a really strong number. There's some debate about whether some of that maybe is driven higher because of immigration. Wendy Edelberg and Tara Watson at the Brookings Institute wrote a very important paper suggesting that maybe the equilibrium growth in non-farm payrolls is about 100,000 higher than normal because of immigration. But I still think that strength in the numbers across the board. We had a little bit of weakness maybe in retail sales earlier this week, but at the same day, we also had industrial production was very strong. So jobless claims also looking good. It's just hard to see where that slowdown is that so many people are worried about. So because of that, we just don't see the urgency for the Fed having to cut rates.
Are you surprised that the higher rates haven't impacted the consumer more? I mean, it's tough to get a plane seat. It's tough to get a seat on a cruise ship. It's tough to get a seat at a restaurant. Talk to us about how the consumer's reacting.
Yeah, this is very important, Paul. So what I think is very critical in that discussion is that the transmission mechanism of monetary policy was actually working last year exactly as the textbook would have predicted. The Fed raised rates in March of 2022. And the most highly levered consumers started responding because you saw delinquency rates go up on credit cards, delinquency rate go up on auto loans, especially for consumers that have more debt, which generally are consumers that are younger also and consumers that have lower FICO scores. Same thing for corporates. You began to see default rates go up for high yield, default rates go up for loans. So in other words, balance sheets that had a lot of debt were first hit by the Fed raising rates. But what really is unique at the moment, and this is the answer to your question, Paul, is that for consumers, they have locked in during the pandemic mortgage rates. As we all know, 95% are 30-year fixed at very low levels. Likewise, for corporates, the vast majority of credit markets is IG, and IG companies locked in and termed out also very low interest rates. And as a result of that, the transmission mechanism has just been weaker than what it normally is. And that changed with the Fed pivoting to dovish, because then on top of that, not only was the transmission mechanism weak, but we also got a tailwind from easy financial conditions with S&P up as much as we have seen.
Torsten, you've led on this, and it's your best chart of the many charts you put out. 10 years ago, folks, the share of mortgages below 4%, Paul, was 30%. As a force of conversation, it's doubled. I mean, the number of mortgages below 4% has doubled in 10, 11 years. And Torsten, that goes directly into the transmission mechanism. You know I'm very negative on the dots. Do the dots of the Fed, have they adjusted to the Slok slower transmission mechanism?
Well, I do think what is very important in the last FOMC meeting, and you have also talked about that on surveillance radio, because what we saw was, of course, that the Fed went from instead saying 3 cuts in 2024 to now saying 1 cut. That on its own is an admission that we were wrong at the Fed. Right. We thought that we would have 3 cuts. Now we think we're going to have 1 cut. So in some sense, the Fed is coming, quote unquote, back to the view that maybe there is no strong arguments for being in this urgent pace of having to cut rates as quickly as they thought just 6 months ago.
We're thrilled you're with us for the entire half hour. Torsten Slok, when we're going to go to Michael Barr News, but I'm going to really come up on beating this. Folks, I haven't mentioned this on air yet, but it's asymptotic 2024. What is he talking about? Come on, Torsten, all the asymptote discussion. Ethan Harris, retired from Bank of America, leading the charge on this, a few others as well. They're lost, and they're extending out the x-axis as far as they can. It's that simple, right?
I agree. I think that what is very important here is that we have unleashed some fairly significant powers with inflation going up. And one point that's also very critical in this discussion is that if you look at Michigan 5 to 10 year inflation long-term expectations, the median is still very well behaved. So the median household still thinks inflation will be 3.1, which is where it's been for the last several years. But if you look at the mean, you will see a significant increase in one half of the population expecting that inflation is going to be dramatically higher than the other half. And if you look at the sub-questions in the University of Michigan, who is it that's expecting inflation to be higher? It is, generally speaking, the bottom 33% of household incomes, meaning lower income households expect much higher inflation than high income households. And it's generally also people with high school or less education that expect inflation to be a lot higher. So you're beginning to see some divergence in inflation expectations. And this is opening up a very important debate in the Phillips curve that you and I, Tom, had talked about for years, where if inflation expectations for half of the population are very, very high, what does that mean for when the Fed says that inflation expectations are under control? Yes, the median may be under control, but there's a significant part of the population that still worry about inflation.
Paul Sweeney's got 8 questions. We're going to come back and do this again. I can't say enough, folks, how important this discussion is. Asymptote, Paul, just so you can understand it. Is how you start in April and the Red Sox have an asymptote to playing 500 ball.
Yep.
That's the smoothness. Somewhere out there in July or August, it's a 500.
And in the AL East this year, Tom, that's not going to work.
That's not going to work. They're going to be way behind. We're going to come back with Torsten Slok. Paul's fired up with some important questions. Futures up 19, NASDAQ up 0.5%. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, after 2 days, a hard-fought congressional primary in Virginia's 5th District is still too close to call. It's pitting the chairman of the conservative House Freedom Caucus, Bob Good, against a Trump-backed challenger, State Senator John McGuire. We get more from Bloomberg Government's Jack Fitzpatrick in Washington.
McGuire is ahead by a little more than 300 votes at this point. If it stayed there, it would be within the 1% margin that would allow Good to require a recount. So this is very, very close. It's too close to call. The AP has not called it yet.
Bloomberg Government's Jack Fitzpatrick reports Trump endorsed McGuire after Good backed Florida Governor Ron DeSantis for president. North Korea state media say the new agreement between Russia and North Korea reached by their leaders requires the countries to use all available means to provide immediate military assistance in the event of war. Former U.S. State Department official Colonel Steve Ganyard says there could be major repercussions if Pyongyang gets its hands on Russia's latest missile technology.
Anytime you have a country that has the ambitions that Kim has to create a ability to project nuclear power, to have the kind of reliable rocketry that's going to allow him to deliver the nuclear weapons that he has delivered, that is bad news for the rest of the world.
Colonel Ganyard spoke to ABC. Putin is now in Vietnam to strengthen ties with its longtime partner in Southeast Asia at a time when Moscow is facing growing international isolation because of its military actions in Ukraine. The San Francisco Giants, St. Louis Cardinals, they will make baseball history tonight when they play Major League Baseball's first ever game at historic Rickwood Field in Birmingham, Alabama. Rickwood Field is the oldest venue in the U.S. for pro baseball. It's where Willie Mays, who died this past Tuesday at the age of 93, began his professional career. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
1 week away, Paul Sweeney, a debate.
Yeah.
We'll have David Gura down there, full coverage.
Yep.
With all sorts of rules. I'm absolutely fascinated. And folks, in the zeitgeist over the last 48 hours, the polling is really fascinating. I'll make a general statement, a vector up for Mr. Biden and a vector flat to down for Mr. Trump. I don't know where that's going to be on June 27th, but we're a week away from this debate. It sort of feels like it's the third week of September, but it does.
Not. I mean, we typically, don't have debates this early in the cycle in the campaign. So, but yeah, the expectations are, I guess they're going to try to manage this the best they can with some of these rules in terms of when they're allowed to speak and so on. But I mean, everybody just wants to see how both candidates perform, kind of away from the teleprompter, away from the script.
Well, to say the least, I think it's going to be absolutely fascinating. And again, David Gura of The Big Take,
Good.
Leading our coverage down there is, well, I don't know. Well, Paul, I came in, I'm like, I don't know, red, green, red. Yep. No, the market's up.
Yeah, and it's
all there is to it.
Being led by NASDAQ, got the NASDAQ up almost 0.5% here. We'll see how we open up this market. Yields are pretty steady. The 10-year Treasury up about a couple basis points, 4.24% here. We actually got the 30-year mortgage below 7% here on the latest. So for those looking to get into the real estate market,
really?
a little bit of a break.
Yes. I did not know that.
6.96% on that 30-year mortgage.
Interesting. Please stay with us from New York, Bloomberg Surveillance.
Iran. In a follow-up, the U.S. ambassador to Israel told Netanyahu the weapon
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, we've got going in the screen, and this is ahead of more economic data out today. About 15 minutes from now, we'll look at May housing starts, also initial jobless claims for last week. So right now we have NASDAQ futures up 0.4%, S&P futures up 0.3%, Dow futures, they're a little changed, up about a point. The two-year yield, 4.72%, that's up 1 basis point. The yield on the 10-year, 4.24%, and that's up 1 basis point. To commodities, we have spot gold higher, $2,338 an ounce. Brent crude, $85 a barrel. WTI crude, $81 a barrel. To earnings we go. Shares of Accenture, well, they're up about 8% right now. It posted third quarter results, providing forecasts as well, so up pretty high. Then you have, on the flip side, Darden Restaurants. They own chains like Olive Garden, Longhorn Steakhouse. Perhaps you've been there. It reported guidance that missed estimates, but here's the thing. It had that beat on profit for the latest quarter, so their shares are up about 1%. And finally, Winnebago Industries. Shares are lower after posting quarterly profit that missed estimates. That is your Bloomberg Business Flash. Tom and Paul.
She does an equity covers like no one.
Exactly.
I mean, you know she's been to Le Jardin d'Olive.
No, yes.
I can't stand it. Can't go there.
Please, discuss with us the menu of Olive Garden, yogurt one.
Can't. Too salty for me. I can't do it. Sorry.
Okay, thank you. That's our culinary moment today. Lisa Mateo, thanks so much. What a joy to have Torsten Slok with us for this half hour. And so much of his work, Paul, as you know, has been on real estate. And in 48 hours, we're going to know a lot more about real estate. We got housing permits, housing starts today, existing home sales coming up here in 24 hours. I mean, the housing market, the rental market, the multifamily market now, really dynamic.
Yeah, it's amazing. We're with Torsten Slok, of course, partner and chief economist at Apollo Global Management. Torsten, talk to us about what concern do you have about this, maybe the commercial real estate market in this country? It feels like there's still a big shoe or two or three to drop, but maybe not. How do you think about that risk here as we look around to some of these big cities and see a lot of vacant office space?
I think the important data point first to keep in mind is that the price per square foot for office nationwide is down more than 40% from the peak. So if we think about what that means, that of course means that there's a lot of office that has been reset at a lower level. Now, there's some important differences across the country, of course, with the Sun Belt, with the West Coast relative to East Coast, relative to metropolitan areas. But the bottom line is really that, when an asset price goes down more than 40%, and in particular when the financing of that asset price is something that normally is reset every 5 years, then we still have a maturity wall in commercial real estate, in particular in office, that is really, really steep. For other types of commercial real estate, things look a lot better. So, of course, you have warehouses, industrial, you have apartments, multifamily, shopping malls. You, of course, also have data centers. There's some very idiosyncratic stories across the different types of commercial real estate. But the main issue still that we should all be watching is office, because that is just still where most of the downward drift is.
Torsten, another economic issue that's really been, or I guess this discussion point over the last 18 months as we look around the world, is this concept of American exceptionalism from an economic perspective, the commercial real estate issue notwithstanding. How real is that, the U.S. economy strength vis-a-vis the rest of the world, and how do you explain that?
Yeah, this is really important. So there is a structural discussion exactly about, is the U.S. exceptional? And the U.S., of course, is exceptional because of large capital markets, much more spending, and broadly speaking, across the board, including on defense, including also on the role of the U.S. consumer. So simply because the U.S., as the biggest economy in the world, playing this very substantial role, it does, generally speaking, attract capital. On top of that comes the more cyclical arguments namely that the US business cycle just happens to be a lot stronger than the business cycle in Europe, the business cycle in Japan, Canada, Australia, emerging markets, and of course also China. And when the US is stronger, then that means, of course, as we're seeing and as we're talking about, then rates will be higher for longer in the US than elsewhere. That's, of course, what we saw with ECB cutting rates. The Bank of England today staying on hold, but now signaling clearly that rate cuts are coming. All that argues for still more upward pressure on the dollar because the US is exceptional, not only from a structural perspective, but also at the moment exceptional from a cyclical perspective. So with that backdrop, when will that exceptionalism from the cyclical perspective change? When the Fed begins to cut rates, then we could begin to see the dollar begin to turn really south in a much more substantial way. But given that's still now being pushed out repeatedly, then I still think the dollar will be going up, and the exceptionalism does play a very important role, both on the structural side and on the cyclical side.
Torsten, one more question. We've got to go to breaking news, but I think this is too important. Back to the idea of an x-axis that goes out forever, and the new idea percolating of an asymptote, I guess down to 2%. Is the asymptote a smooth glide path down to 2% out there somewhere, or is it 2.x%?
So if you mean inflation, of course, then the issue is that inflation at the moment, as you know, is 3.3. The Fed's target is that it should be 2. 3.3 is not 2, so that's why FOMC members repeatedly talk about, well, maybe we do need to wait a little while longer before we start cutting rates. And to your question, will we have an asymptotic move down from 3.3 to 2.0? I think that the answer to that is absolutely not. We still have significant tailwinds from fiscal policy, the CHIPS Act, the Inflation Reduction Infrastructure Act, are all policies that are designed to lift growth over the next several years. Likewise, we have a very strong tailwind from easier financial conditions. As long as the AI story and the stock market goes up, we still will have, like we saw this earnings season, strong demand for airlines, hotels, restaurants, concerts, sporting events. So the short answer to your question is I worry that inflation is not going to come down in a straight line to 2% from the 3.3% where we are today.
Torsten Slok, thank you so much. With Apollo, and of course that's segues perfectly, Paul. How many times have you, on the road, work in equities, how many times did you have to rent a car from Hertz?
Of course. And I'm a Hertz
Gold
there. Customer. Yeah,
Gold,
I'm all in.
platinum.
Yep, all that.
I can think of Boeing is the model right now because of large cap. Hertz, 88% debt. And they just announced, I believe, quote, a junk bond sale about 13% yield. Wow.
Yeah, I mean, you look at the 10-year Treasury at 4.24%. Again, the price talk for Hertz looking to do $500 million of high-yield securities. And it looks like they're going to have, the price talk was about 13% coupon for that thing to get that out the door. And I'm just looking at the stock. It's down, 70% year to date. The market cap is now below $1 billion. They've got a ton of debt on their balance sheet, Tom. I got almost $18 billion. They've got some preferreds out there. I don't know what that's all about.
Yeah, within the financials, there's one headline: Hertz accelerating fleet dispositions, which is obviously this EV car bet. Eric Schatzker doing great work on that for Bloomberg. But I mean, you talk about a buy and hold strategy. Hertz, they're everything.
Yeah.
I'm humbled.
Yeah.
Wow.
Yeah, exactly. I mean, this looks like a balance sheet that needs to be restructured somehow, and I don't know how you do that. So I guess you start by trying to, push out your maturities and refinance what you got out there now. And again, 13% coupon. How long can you support that? So we'll have to see here, but a tough time here for our friends at Hertz.
And the small amount of money to show it is. Jody Lurie over at Bloomberg Intelligence even alludes within our credit analysis, is Hertz qualify like GameStop as a meme stock? I don't have an opinion.
Yeah, I don't either. She covers these bonds, and so this unfortunately may end up going to our workout analyst Phil Brendel, and that's what you don't want to happen, because when Phil gets a hold of these things, that means things are really bad, because he just focuses on workouts.
I have no life, folks. I just sit here at the building like a gerbil. Paul's out, Lisa gallivanting around. But I did have a Hertz experience recently, and it was hugely positive until I checked out. And all the add-on fees.
Oh, yeah. It's like buying a concert ticket. Yeah.
It was worse than that, frankly, because the concert ticket, it's coming.
Yep.
But I was, they got their fair share.
Yeah. So, but you would think with all the travel that's going on here that their revenue line would be strong. So if they're having problems in this environment, wow, you know.
Look to Bloomberg Intelligence for credit analysis. Robert Schiffman, Jody Lurie, and all expert. Joel Levington as well. It's a great team. Hertz, a 13% piece, if you're brave. Futures up 19, NASDAQ up 0.5%, the VIX 12.54. We are on YouTube. Subscribe. Search Bloomberg Podcast. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're just moments away from more economic data. We're talking about initial jobless claims for last week and also housing starts for May. So as we wait for that, let's get to futures right now. We have NASDAQ futures up about 0.5%, S&P futures up about 0.3%, Dow futures are little change, up about 20 points. We have the 2-year yield at 4.71%. That's little change. The 10-year yield 4.22%, and that is little change. All right, we'll start with initial jobless claims for last week. The survey was from 235,000, came in at 238,000. The prior was 242, so you see the difference there. And then as far as housing starts, well, they were slightly lower than the survey that was expected. So that's as far as that. The the reaction in the market, not much change. We still have NASDAQ futures still up about 0.5%, S&P futures up 0.3%, Dow futures still little change. Looking at yields, let's see. The 2-year yield, 4.71%. Still little change, and we have the 10-year yield at 4.23%, and that is still little change. Quick look at earnings, because we just got Kroger coming in. Sales topped estimates. Consumers continuing to spend on groceries. Shares up about 3%, even though they're turning to lower-cost store brands, and they're also shopping at multiple retailers to save themselves some money. That's your Bloomberg Business Flash. Tom and Paul.
Do you go from Kroger to Costco to Kroger to Costco to Albertsons to this to Wegmans?
I do multiple. I do go to Farmers Market and then like the local shop, because I get cheaper, berries and fruit and vegetables and better at the farmers market.
And where do you get your Captain Crunch and Fruit Loops?
I never get those, Paul.
Oh, okay. All right, just checking.
Your grocery report. Lisa Mateo with us this morning. On economics, a little lift here. I'm going to call it. The yields come in a little bit. I'm watching the 10-year real yield, 2.01%. We may get a 199. We'll see on that. Claims came in, continued elevated with a revision up just 1,000. Don't want to oversell that. And housing starts little moldy, as they say. We'll do more of that tomorrow as well. Our economic indicators, always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support in technology. Okay, what we're supposed to do here is give Anastasia Amoroso of iCap a massive victory lap 9 months ago, whatever. Just shut up and get in the market and buy big tech. She absolutely nailed the 2024, except we were talking about AI, and you are the Chat GPT queen. I mean, let's be honest here. You're glued to it. How do you use Chat GPT for our entire audience? It's like, what?
Well, it is a game changer, and I think it's a huge productivity boost. And if you haven't used, not that to make any product endorsements here, but if you haven't used the Microsoft Copilot, I think you're really missing out the next wave of how search is going to be done. And whether it's preparing for an interview, whether it's preparing for a client meeting, whether it's needing a quick synopsis of a particular topic, it is amazing what you can do with about 5 seconds worth of time.
You need to create 7 pages of iCapital brilliance. You're at O'Hare, your plane's delayed 2 hours, you're on a laptop with ChatGPT. How does it help you create that research note?
Well, first of all, it's a quick prompt. It's a question that you ask, please generate 500 words, and here they are. And by the way, I have done this. I do not publish the ChatGPT as the research, but if I need a quick synopsis of a particular topic, that's the perfect way. I also do happen to do a lot of interviews with a lot of our asset managers, and what a great way to prepare and know the key points going into it, whether it's about the firm, about the investment strategies. So I think you can use across.
What's great, Paul, when Anastasia is at O'Hare, she's at Stanley's Blackhawk Kitchen and Tap. She's using ChatGPT to get the correct craft beer.
So Anastasia, how do we bring that into our investment thought here? I mean, because for really 18 months, AI has been one of the key themes driving this market higher. Is that justified in your minds? Are you kind of, as an investor, all into that story and looking for ways to play it?
Yeah, I think it's 100% justified. And I know a little bit before we came on air, we were talking that maybe not a lot of people are actually using this across their functions right now, but I think a lot of people will in the future. I think what's happening right now is the race to invest in artificial intelligence by hyperscalers, but also by other companies, across different industry verticals. I think there's a great realization by companies, if you're not going to focus on investing in AI now, you are going to be left behind. So why would you continue to hire the same amount of workforce when you can automate certain tasks and boost your margins? So I think that's a universal sort of understanding right now from corporate development departments, and that's what's driving the investment cycle in artificial intelligence. That's why I don't think it's a coincidence that the likes of NVIDIA and Broadcom and actually a whole suite of semiconductor semiconductors are benefiting from the build out of the backbone of artificial intelligence. Do I think the momentum is a little bit stretched at this very point? Do I think some exuberance crept into a stock like NVIDIA? Yes, but at the same time, if the data center sales are growing 400% plus year over year, that's fundamentals.
So, all right, so NVIDIA, check, I got that. How else are you suggesting to your clients that they maybe get some exposure to this, if it is in fact a long-term trend?
Yeah, it's a huge trend. And in fact, the total addressable market for AI is going to double in the next several years. And it's comprised of, a couple of different pillars, which is, of course, the hardware, the semiconductors, but actually the biggest chunk of who's going to benefit from AI is software. And it makes sense why everybody is chasing the semiconductor trade, because you have to have the chips in place in order to train the algorithms.
Okay, we get that.
Well, once you do, Tom, what are the applications going to be beyond the co-pilot that are leveraging AI to boost your productivity?
Okay, so I know this is brilliant. I know you're not going to talk about individual stocks, so I'll bring up Adobe is the kind of software mix as well. Take the 50 Adobes out there. Where do you see their income statements in 5 years?
Well, I think they're going to reflect the benefit of artificial intelligence. One thing, Tom, that's recently happened to software, it was everyone's favorite sector just a bit ago, but now that's not the case. For example, you have seen software revenues grow at 20-25% per year back during COVID times. That has decelerated to about 10% today. And valuations have derated very meaningfully. But I think that's an excellent entry point into a lot of these software stocks, because to your point, 5 years from now, that's what's going to catalyze the next growth wave in software, is monetizing AI.
A derating, Paul, is Anastasia speak for south.
South.
The stocks have gone south. They've derated.
Well.
Lisa, throw a brick at her.
Well, to be fair, some of them have gone sideways, some have gone south. But if you look at the multiple, it went from 20 times to 5. And that's back to those pre-COVID normalized levels. So that's why I like that as an entry point.
Adobe growth, 22% in the heart of the pandemic. Revenue growth right now, 11%.
Yep.
It's cut in half.
Absolutely. All right, so what I hear a lot is U.S. versus non-U.S., big cap versus smaller cap. But still, some of the valuations in Europe still seem so attractive. But I guess the concern is you just don't want to get in that value trap there. How do you think about Europe and opportunities there?
Well, I think you have to look at the valuation, but you also have to realize what the catalyst might be. And for the last couple of years, it's been really tough in Europe because you've got higher electricity costs, you've got meaningfully higher mortgage expenses. And now I actually think the peak pain of high mortgage rates is behind us in Europe. And I don't just mean because the ECB is cutting interest rates. I mean, a lot of mortgages in Europe were floating rate mortgages, depending on the country, 70 or 80% of them. So that's a lot of, pain that the consumer had to absorb, but that's turning the other way around. And so I now think the real disposable income for the European consumer is likely to grow in this year and next. And business confidence, French elections notwithstanding, has recovered quite a bit. So I like the valuation, I like the positioning, and now I think we have the summer of Europe catalyst.
So what is the iCapital new money allocation right now in the American market?
For the public markets, what I would say is don't chase the AI trade right here, right now. Let's see a little bit of a pullback, but I would be reallocating to parts of the market they've seen some consolidation, Tom, and that's consumer finance, for example. I think the consumer is just fine as an aggregate. I would be looking at consumer discretionary, financials, as well as industrials. That's the public market side of it, but to your point, the other big part of the allocation is within the private markets, and looking at things like growth equity, buyout, private equity, private credit, and of course infrastructure. That's where we see some of the flows going.
This has been great. Thank you so much for the chat GPT.
Thanks.
I've never used it.
Try the co-pilot. That's the game.
Try co-pilot.
I'm signed up for it, but I've never used it.
Matt Miller's all in on the chat GPT.
Dear Chat GPT, how to get afterthought to empty the dishwasher.
Right.
What are they going to say? Anastasia, thank you so much with
Thanks so
iCapital.
much.
Absolutely nailing this equity market. Red and green in the screen. NASDAQ up 0.4%. With our news in New York City, Michael Barr.
Much, Tom, Paul, and Lisa. After Tuesday's hard-fought congressional primary in Virginia's 5th District, it is still too close to call. It's pitting the chairman of the conservative House Freedom Caucus, Bob Good, against a Trump-backed challenger, State Senator John McGuire. With 98% of the votes counted, McGuire leads by around 300 votes, or less than 1%. That would allow for a recount. We get more from Bloomberg Government's Jack Fitzpatrick in Washington.
There is an advantage for the challenger that shows us the power of a Trump endorsement, even a very conservative lawmaker in a Republican primary. But we're going to have to keep waiting to see what the actual final result is.
Bloomberg Government's Jack Fitzpatrick reports Trump endorsed McGuire after Good backed Florida Governor Ron DeSantis for president. Good has since backed Trump, but the former president has said it's too little too late. North Korea state media say the new agreement between Russia and North Korea reached by their leaders requires the countries to use all available means to provide immediate military assistance in the event of war. Meanwhile, Russian President Vladimir Putin is in Vietnam. Tropical storm Alberto, the first named storm of the season, slammed into coastal Texas. Alberto wreaked havoc, Mexico leaving 3 dead. Officials are warning of an above-average hurricane season for the Atlantic. Zero containment overnight in the deadly wildfires in New Mexico. It forced evacuations in multiple counties. Governor Michelle Lujan Grisham declared a state of emergency.
The number of New Mexicans who on their own are helping with livestock and resources and are offering up their own homes for shelter shows me once again the generosity and the compassion of the people in this state.
2 fire deaths are reported in New Mexico. Meanwhile, in California, several wildfires are burning. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr. I mean, this is not Ellie De La Cruz, but they're both 6'6", I think. The Birmingham Barons, 1994, coming in with a .202 batting average, AA baseball, was one M. Jordan of Chicago.
No kidding.
There's a lot of history going on at this game tonight on Fox TV. Giants Cardinals, but all the focus, of course, will be on Willie Mays. But that was something, Michael Barr, when Mr. Jordan decided, I want to be a baseball player.
That was going in a time, if you remember that, it was around the time when he lost his father and all of that. And I was just wondering if he was trying to sort things out in his head during that time, when that happened.
And then he returned to the NBA and did okay.
Yeah, just a tad.
That was the time remember we had Bo Jackson doing multiple sports, Deion Sanders doing multiple sports.
Yeah, Jim Rice, I think, I would put in that category as well.
Interesting.
But just interesting, a little bit of the history. This game tonight, hugely anticipated. It's in Birmingham, Alabama, with all of the history of the Barons back to 1910, I believe. And this is the oldest park. This is not the stadium in Buffalo,
right?
The natural Robert Redford. We almost went over to be in the crowd for that.
Oh yeah,
years ago.
Sure.
But this is with a style of panache of a smaller field. It's going to be just tune in just to see the park and happen to see the Giants crush the Cardinals for Willie, which I'm sure they will do. Futures up 12, red and green on the screen. The VIX 12.57. Thank you for being on YouTube. Search Bloomberg Podcasts. Bloomberg Surveillance.
24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, we've got red and green on the screen, and this is after more economic data. Initial jobless claims fell by more than 5,000 to 238,000 last week, and that was from an upwardly revised 243,000 in the prior week. Now, meanwhile, new home construction in the U.S., well, that slumped and makes it the slowest pace in 4 years. So right now we have NASDAQ futures up 0.3%, S&P futures up 0.2%, Dow futures little change, down about 32 points. We have the 2-year yield 4.73%, that's up 1 basis point. The 10-year yield at 4.26%, and that's up 3 basis points. Spot gold higher at $2,338 an ounce. We have Brent crude at $85 a barrel, WTI crude at $81 a barrel. A few companies in the headlines. That's Hertz, first of all. Their shares up about 0.5%. It's looking to raise $750 million. It's a 2-part junk bond offering as it works to boost its balance sheet. Then you have CDK Global, restored that dealer management system software after that cyber attack brought thousands of car dealerships to a stop yesterday. And then Boeing down nearly 1%. Families of the victims' 2 fatal 737 MAX crashes, they're asking the DOJ to fine the company almost $25 billion. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. On France, and everyone knows my affection for the wonderful Jonathan Fenby, with all sorts of efforts on the first, the second, the third, the fourth, the fifth republic, and the fear that's always across France of a generation of a sixth republic. His work on de Gaulle and all, he's just first rate. Right there with him is Lionel Laurent. He's Bloomberg Opinion columnist, and he's been very busy. I've been begging every day, oh, I'll buy you something at that little cafe on Saint-Germain. Lionel finally catches up with us. Lionel, thank you so much for joining Surveillance today. How desperate is Mr. Macron to this first election, or is he really focused on the second election, first week of July?
So I think it's obvious that this is not turning out the way he expected. The main question has always been, can the left get its act together in this usual 2-horse race between Macron and Le Pen? And the left has got its act together. So now Macron is fighting for third place, and you do well to mention de Gaulle and the Fifth Republic, because the Fifth Republic was supposed to keep out the extremes.
Yeah.
And so we have elections with 2 rounds and a runoff vote. The problem is if you're in third, you are basically out of the game, and Macron is looking out of the game in a lot of constituencies in France. So it is looking pretty desperate unless he can pull a Hail Mary and cobble together a coalition, but his stock is pretty low in the French political scene.
For the left, which we've barely talked about, is Mr. Hollande showing up again as the great eminence grisée? You see how I used that?
I saw that. Very nice.
Thank you very much. Lionel, Hollande showing up for the left. Is that important?
It is important to show how much the world has changed since he was president, because he is the face of a left bloc that is way more extreme and way more far left, in the same way that the right has become kind of captured by the far right. If you look at the policies of this left bloc, it's still very much leaning towards Jean-Luc Mélenchon, the far left firebrand, and the ideological rainbow of this left bloc, by the way, which runs from really hard anti-capitalist parties that want open violence on the streets, all the way to the bobo, right, the kind of bourgeois types that Hollande and other politicians appeal to. It's, in my view, untenable. I'm not sure this lasts beyond the election, but it shows how the system works. It encourages coalitions of convenience before the vote, not after.
Lionel, I guess with a few days, weeks here of hindsight here, do we have any better understanding why Emmanuel Macron called for these snap elections?
So everyone has been trying to psychoanalyze Macron. Let's take the madness and the method, right? I mean, the method is that he knew that he had to make a budget. And making a budget at the moment when your deficit is at 5.5% of GDP and Brussels is breathing down your neck is basically impossible. So the method is you make it someone else's problem. Throw it to the French. Let's see if anyone else can do a better job. And then over the next 2 years, gridlock, chaos until the real race, which is the 2027 presidential elections. But there is a whole kind of layer of madness here. There is a bit of ego, a bit of narcissism. Clearly, he was upset at having done so badly in the European elections before. He could have waited. He didn't need to do it now. So I think that is why there is such shock and disappointment, even within his own camp. Everybody around him feels betrayed right now.
What are we seeing from corporate France? Are we seeing the business community, weigh in on this situation?
So, I mean, this is really a bit of a nightmare scenario, right? Because business has been riding high for about 7 years. We've had these summits every year, Choose France, Jamie Dimon, the great and the good, coming to praise France and Macron. Now I think there is nobody willing to stick their head above the parapet. I think there is a tacit silence in the sense that, well, let's wait and see, because if there is no majority, then there'll be gridlock, and that might be the best scenario. But I think with the far left coming in, there is now, I'm afraid, a very cynical view, which is to say, if you've got to choose between the far left and the far right, we may have to throw our die with the far right.
So there's a first election. We'll have team coverage with Lionel Laurent. And then there's the final second election. And I would say it's not much different than Mr. Biden hoping for a broad set of independents to show up in America. Is the hope and prayer, Lionel, that Paris and Lyon show up for Macron? Is that really what this is all about? Is he needs historic turnout in the fancy, elite, urban environment to push the left and the right aside?
This is more like the UK election, Tom. This is the Sunakification of Macron. He's in third place. His best hope right now is to come out and say, we need you to come and vote, simply to reduce the majority of the far right, not even to win. It's to actually be
really,
able
you
to
think
play the
this
game.
is important. You're stating, Lionel Laurent, that Mr. Macron is in a position now to lose.
Absolutely. That's what the polls show. We're looking at a strong 30+% showing for Le Pen's bloc. Second place in the sort of high 20s is the left, and Macron is in the high teens. And even if you get very high turnout, and even if you get this runoff vote with the possibility of 3 players and not 2, this is very technical, but the point is you could get runoffs where Macron does show up still. It's going to be very, very hard. It's all about tactical voting. It's all about where do you place your candidates. I really think his best hope is to have a relative majority for the far right, to basically help them win less.
Fifth Republic, October of 1958. Is there a risk within the fracture in the history that we see a Sixth Republic formed?
So when I looked at my dad's library when I was a kid, there were books written about the Sixth Republic back in the 1970s. So this is, we in French love to dream of revolution, and we've been dreaming of it for decades. But you're right, there is a kind of exhaustion of the Fifth Republic, because it only works if there is a strong man in the presidency and a party of government in government. What's unprecedented here is you will still have a president, still respecting the Constitution, but a party of non-government. The future prime minister could be a 28-year-old who has never really had any particularly important position. It is unprecedented, and that could lead to some interesting eventualities, either chaos, something very negative, or a kind of curious positive, where the kind of deep state steps in to run things. Maybe Macron gets along better with the far right than we think. So, but it is unprecedented.
So, Lena, what you need to do is call up Sparta, the head of Bloomberg Radio, and say that Lisa Mateo, Michael Barr, Paul Sweeney, and Tom Keene need to be there July 7th for the French election. I think that would be good. Lionel Laurent, thank you so much. Just brilliant. He writes for Bloomberg Opinion. Lionel, just absolutely definitive on his France. I can't say enough about it. We've got a great hour coming up. Really can't say enough about the study of this equity market with a lift today. A lot of other things going on, including some dynamics in yield as well off of the economic data we saw at 8:30. I'm sad. It's 36 years ago. Warner Brothers decided to make the single best 18-year-old, 19-year-old jazz guitarist in LA a star, and they killed it with the first song. Robin Ford, for those of you in the world of jazz and blues, this is Talk to Your Daughter, which was a modest hit.
Please don't doubt me around. You don't quit just moving, put your 6 feet in the ground. talk to your daughter? Did you talk to your daughter? Did you talk to your daughter? She done made me love her and I ain't gonna leave her be. Talk to your
daughter. This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Really interesting Thursday. I forget what day it is. It feels like a Monday.
Yeah, like a Friday.
It's a Thursday. We had claims out, and, yields knocked around a little bit. 10-year real yield, 2.04%, red and green on the screen. But nevertheless, a lot of good equity talk this hour. Paul, what are you taking away from it?
Yeah, I mean, AI is, it is an investment theme that's here to stay, Tom. It wasn't just a 23, 24 type thing. This is it.
A lot of good perspective to come. We're thrilled to bring you Seth Carpenter in moments in our studio, of course, with Morgan Stanley. Let's get right to it from the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mateo.
You got it. And we have futures red and green on the screen right now. And this is after the market holiday. So right now, NASDAQ futures up about 0.3%, 68 points. Dow futures down 0.1%, down 45 points. S&P futures up about 0.2%, 10 points at 5,570. Over to the bond market, the 2-year yield 4.74%, up 2 basis points. The yield on the 10-year 4.28%, and that's up 5 basis points. European stocks strengthening after the Swiss National Bank delivered an interest rate cut. The BOE also maintained its key interest rate at 5.25%. Checking in with the stock 600 right now, up about 0.3%. As far as currencies, right now we have the dollar edging higher against a number of currencies, including the Japanese yen, euro, British pound. We have Bitcoin up 1% at 65,000. To tech, we'll start with Nvidia. Shares up another 3%. The world's most valuable company extending its lead over Microsoft and Apple. And finally, shares of Dell, Supermicro Computer on the rise. We have Dell up 4%, Supermicro Computer up 5%. This is after Michael Dell said the company is building a, quote, Dell AI factory for Elon Musk's startup XAI. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. It's one of the coolest double majors out there with massive colonial heritage. You go to William and Mary, you show up, and you're going to take economics. That's what you do if you're Seth Carpenter now at Morgan Stanley. But you double barrel it with French in economics. Was it your mother's idea?
Good to see you too, Tom. In fact, I was a French major before I was an economics major. I did a bunch of advanced placement classes in high school and sort of started right into the sort of advanced classes. Believe it or not, I thought I was going to be a lawyer, and someone said...
The deepest sympathies.
Somebody said to me, if you want to be a really good lawyer, develop your analytical skills, take a few economics classes, can't do you any harm, and you just might learn something about analytics. And boy, a few classes in, I went I went deep into economics, and it didn't look back.
Some of these first-rate minds, which you've had the privilege of being with and working with as an equal, is someone like Richard Claret of Columbia or a guy named Bernanke at your Princeton. And they have a massive respect for the x-axis. The financial media is completely driven by change in the y-axis and all that. Ethan Harris leading the charge here, ex-Bank of America, that we don't know where the x-axis is, and we're going to have what mathiness is an asymptote effort, a glide path out somewhere. Do you have a clue at Morgan Stanley where the x-axis is for our Fed?
If I can interpret the x-axis here to mean the time dimension and sort of how things go out over time, I think that's going to be the key. We have a pretty strongly held view that inflation, for example, is coming down, and so as a result, the Fed's going to come down come off the peak rate. Exactly when that happens, getting that timing exactly right is tricky. We were very heartened by last week's CPI print because we've been telling people for a long time.
Ellen's been leading on that.
Exactly. Inflation's coming down. And we've been getting tons of pushback left, right, and center. And then the CPI print came out and it made the story, at least for a while, easier to tell. We think there's more to come there, but exactly getting the timing right is super hard.
Tom, the oldest football rivalry in the South, it is not Alabama, Auburn, or Mississippi, Georgia.
Yeah.
It is William and Mary and the University of Richmond, like 130 years. So we are rivals.
George Washington was on the sidelines.
Exactly. Hey, Seth, how concerned are you and your colleagues at Morgan Stanley about the consumer here? Because we're hearing more and more data that certain folks are doing well out there, but a lot of folks aren't. If you don't own stocks or bonds or real estate, this inflation thing's hitting you really hard. How do you guys think about that?
No, I think that's exactly right. I think there's a lot of heterogeneity. I don't think there's any two ways about it. You can see some of the deterioration in credit conditions. You can start to see credit card balances starting to rise after people went through over, a few years ago, all the excess savings from the fiscal transfers. So I think there's no question whatsoever that there is heterogeneity across the consumer. But there's also heterogeneity across what consumers are spending on. So if, we got retail sales, people made a lot about that coming in soft. If you look at the first quarter where we have an entire quarter's worth of GDP data for consumer spending, durable goods was negative quarter on quarter, non-durables was about flat quarter on quarter, services was holding up. So again, more heterogeneity. And I think that's the name of the game when we have what we have said for a couple of years is going to be a soft landing where we're going to have slowing in the economy. We're going to have restraint from monetary policy. Inflation is going to eventually go away. That's not going to be a recipe for everything happening smoothly, uniformly across the board.
Well, then that argues, it seems like, for cutting rates now. Do you think the Fed should be cutting rates now, or is this wait-and-see approach maybe the best way to go?
A bit of both. So I think they easily could have cut rates already a little bit, come off the peak. I don't think there's any hurry for them to slash rates. The economy is not dropping off of a cliff. Our forecast is still more aggressive than the markets. We're looking for 3 cuts this year, starting in September. Again, to get back to Tom's point about if the time axis if time is on the x-axis, then that's where a little bit of the uncertainty is. The Fed, Chair Powell, his colleagues, they saw the strong inflation data in the first quarter. They were surprised at the upside. We were surprised at the upside. Understandably, they said, let's make sure that the trend is still down. And so I think that helps to explain a little bit of the wait and see. But directionally, yeah, I think they're fine to come off of the peak.
The heterogeneity. Do we underestimate productivity, but its efficacy to the haves versus its efficacy to the have-nots? To me, that's original territory. We need to study that out 5 years.
So I don't think I disagree. I think there's clearly AI, one of the key topics. People are talking about it now. People will continue to talk about it for a long time. At Morgan Stanley in research, we just put out a piece recently. My colleague over in London, Ed Stanley, pulled all of our equity analysts around the globe and said, take each of your individual stocks that you cover and let's classify them as enablers of AI, as sort of beneficiaries, as maybe people getting disrupted by AI, and see what's going on. I think this is categorically a topic that's going to drive the narrative for a long time, not just through NVIDIA, but NVIDIA is clearly part of it. And so then the question becomes, who wins and how do they win? And I think returns to capital, returns to some companies are going to stay very, very strong. And to your point, Tom, those returns are not going to be shared uniformly across the income distribution.
Do you think that AI makes the global economy more productive? Is there a way to measure that? Or does that go into GDP forecasts or inflation forecasts?
I think great set of questions. I think it's hard to believe that it will not make things more productive. And the way I like to think about it is, I'm doing a forecast. There's a lot of uncertainty. I can think of different possible outcomes, and you can put different probabilities on those outcomes. But I kind of see either AI is going to not make people more productive, or it will make people more productive. And the average of 0 and something positive is positive. So I think directionally it's pretty clear. The time horizon is hard. The measurement of it is very, very hard. So one of the favorite examples people love is about call centers, right? So I remember last summer, we're coming into the summer season. This time last year, I was booking our family travel to Europe, and it was a disaster. And I was on the phone on 2 different occasions for 2 hours straight.
No.
You can imagine AI at its glory could take that down to 5 minutes. And if every customer goes from 2 hours to 5 minutes, every single person involved will say that's higher productivity.
Yep.
But if they don't change the number of workers, if they don't change the number of flights that get sold, I'm really not clear that's going to show up at all in the GDP data, and yet it's clearly going to help things.
We got to have you come back. Next time, drag Zentner along with you. You two are on speaking terms?
Not just that, we have our offices next to each other, and we talk every single day.
So you have to talk fishing with her. You have to do trout.
I listen. That's where I listen.
We'll do a half hour or even 3 blocks. Bring Zentner along with you next time.
Fantastic.
I think it would be a great conversation. I got like 10 more questions we didn't even get to. Seth Carpenter drives economics at the new Morgan Stanley. Thank you so much. Red and green on the screen. We're not open for trading yet. It's Thursday, Feels like a Monday. It's Thursday with our news in New York City. Michael Barr.
Very much to Tom, Paul, and Lisa. Auto retailers across the U.S. have suffered a second major disruption in as many days after another cyber attack at CDK Global. It's the software provider that provides thousands of dealers, and they rely on that to run their stores. The CDK informed customers today of the incident. The company shut down most of its systems again and said in a recorded update that it doesn't have an estimate for how long it will take to restore services. Louisiana has become the first state to require the 10 Commandments to be displayed in every public school classroom from kindergarten to college. The ACLU and other groups are vowing to challenge the law, which takes effect next year, citing the separation of church and state. Louisiana Republican Governor Jeff Landry at Wednesday's bill signing.
This bill mandates the display of the 10 Commandments in every classroom in public, elementary, secondary, and post-education schools in the state of Louisiana.
The U.S. Supreme Court struck down a similar law in Kentucky in 1980. The State Department is calling out what it calls escalatory actions by China in the South China Sea. That, as the Philippine military released videos of a, quote, brutal assault in disputed waters. Bloomberg opinion columnist Mark Champion says tensions in the South China Sea are likely to continue.
Over the years, the Chinese Coast Guard and Navy have been expanding at an incredible pace. Whereas, for example, the Philippines has and the entire Navy is about 100 ships, and their job is to patrol about 7,000 islands, and they simply can't really keep up.
Bloomberg Opinion's Mark Champion says Secretary of State Antony Blinken reaffirmed the U.S.'s, quote, ironclad commitments to its defense treaty with Manila during a call with his Philippine counterpart yesterday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Well, Michael Barr, thanks so much. The reach of what we do is fabulous. You mentioned William and Mary.
Yep.
And of course, Peter Atwater has to send in a note. Peter Atwater, adjunct professor at William and Mary, one of their great forces. And he had a book out a year ago, The Confidence Map. He was loving listening to Seth. About William and Mary economics. The Confidence Map, charting a path from chaos to clarity. It came out a year ago. He should have waited and brought it out now, because It's even more chaos now, don't you think?
Yeah, it is. I mean, we were talking earlier today about some of the political uncertainty in Europe, particularly in France, but also in the UK. And then, of course, we have a U.S. election coming up. So you've got that all laid on top of the economic finance that a lot of folks are trying to discount into stock prices and bond prices.
Peter Atwater, it's like Dr. Peter, feeling certain but powerless. We are dependent on the behavior of others for good or ill. That's one of the big emotions out there now.
Yeah, exactly. And a little bit of a FOMO in the stock market. If you don't own NVIDIA, where are you? So, I mean, people are trying to figure that out.
Do I have to have breaches if we go down to William and Mary? I mean, it's like
maybe,
very colonial.
Yeah. It is. It's great. It's a great town.
It's very crude. Peter Atwater, thank you so much for catching up with us this morning. Futures Up 11 on YouTube. Search for Bloomberg Podcast. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a mix of red and green on the screen. NASDAQ futures are now leading the gains up about 0.2%, 56 points at 20,252. S&P futures up about 0.1% or 10 points at 5,570. Dow futures down 0.1% or 38 points at 39,249. The 2-year yield 4.74%, down up 2 basis points. The 10-year yield at 4.27%, and that's up 5 basis points. Moving the markets, let's start with Trump Media and Technology, down 10% right now after an SEC declaration that could dilute shareholders. And we have business consulting company Accenture. They're up about 8%, reported better than expected new bookings for the third quarter, and that included a surge in its Gen AI offering to more than $900 million. Finally, recreational vehicle maker Winnebago Industries down more than 5%. It posted quarterly profit that missed estimates. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Good drive forward a continued conversation of equity. Futures levels now, they're set a little bit higher than the open market here in 12 minutes. SPX 5569, Dow under 40,000, that's Boeing affected. NASDAQ 100, 20,247.
There you go.
I'm not even used to seeing that number.
No, not at all.
On the screen.
We'll be back to that, the Dow 40,000 we had hit a few weeks ago. That's back in sight.
Joining us right now, Linda Dissel, Senior Equity Strategist, Federated Hermes. Of course, Federated basically invented access to money market funds, really changing banking forever. They did this out of Pittsburgh, huge association with the academics of Pittsburgh and also, of course, Carnegie Mellon. Linda, I want to audible here before Paul talks to you. Theron Mohammed has an article in Business Insider today, and it's the gloom of the four most expensive cities in America. Shock, they're all in California. San Jose, LA, San Francisco, San Diego. The number one intelligent place to live, according to Business Insider, is Pittsburgh, Pennsylvania. And it's not the baseball field, which is magnificent, or the Penguins. What's the pixie dust in Pittsburgh right now that makes it such a reasonable place to live?
Well, good morning, and thanks for having me, and thanks for the shout out to Pittsburgh, Pennsylvania. It is a reasonably quite big city that is reasonably safe. The weather here is terrific. We have the 4 seasons. We have excellent health care here. We have excellent universities and schools here. And gosh, the Yinzers, of which I'm one, we're just a friendly group of people. Yeah, and we don't even boast about our sports teams.
Exactly.
We can't.
Yeah, they have I think it's underspoken in the elite East Coast.
It is. I agree.
You go out to Altoona, you make that turn on I-80, and Pittsburgh's right over the next hill.
Great train viewing at Altoona, Tom. There's a great horseshoe curve there.
That curve,
it's awesome. Yeah. Anyway, I'm a big Pittsburgh fan there. Linda, talk to us about you guys at Federated Hermes. You have a 5,200 year-end target on the S&P 500. Just we're at 5,570. How do you kind of square that? What's your view?
Yeah, it's and thanks for asking the question. I mean, it's interesting because once we went over 5,200, which was consensus at a moment, you saw lots of Wall Street firms, one after another, just raising their estimates for the year end. First of all, it's extremely hard to figure out where we should go with that number since the market is so heavily weighted to the top names. If any one of those top 10 names were to fall out of bed for some reason, much like Tesla did, that could bring that number down dramatically. So it's really hard. And so we've suggested we thought we'd have a sloppy summer. Today, welcome to summer. And we still think we will do, but we're emphasizing that we're bullish and we think we'll get to 6,000 sometime next year.
So what's going to get us to 6,000? Is that going to be the Fed cutting rates? Are we going to earn our way into it? What moves this market going forward, do you think?
Yes, well, we absolutely have to see the broadening. And I know we've all been talking about broadening for some time. We had some broadening towards the end of last year, and then it all gave way again to these big names and NVIDIA and more NVIDIA. And so to the extent that we start to see really what has looked like a neutral situation all around the world. If we look at manufacturing economies, even the services area, right around neutral, which way is this going to break? Will we see accelerating growth around the world? And will the United States see some accelerating growth? We watched industrial production this week, the Empire number, maybe a little bit better. Then we can start to feel confident where we may be in this cycle, not too close to the end of the cycle, and then we can feel comfortable broadening into what we think is the next easy place, which would be large cap value.
You have a portfolio run by one of your young kids, Stephen Auth. It happens to be domiciled out of Ireland, but it's really a foreign US-centric large cap fund. Paul, I think we need to review the performance of the fund. For starters, year to date, he's in the 96th percentile. 1 year trailing, he's in the 91 percentile. 5 year trailing, I think he's gonna get a redo on a contract from Dissel. He's in the 88th percentile. What is Stephen Auth doing that's different to lead him to a Sharpe ratio? I'm not going to go into the details, folks, but his Sharpe ratio is on the edge of 2, which is an act of God. What is Steve Auth doing at Federated?
Steve Auth, of course, he's my boss, and everything he does is perfect and right. And so one of the beautiful things about Steve and about people, even I would like to say like myself, people and like you that have been in the business for a long time, and you've seen many cycles, and you kind of can get a feel for where we are in a cycle and why things are behaving the way they are. There's just so much information, so much noise out there. And of course, we at Federated Hermes, we do a lot. We do a lot and invest a lot in technological advancements, in talent and talent around the world. And then we do what we say we do. We have an objective and we go after that objective. So we don't cheat. So if we have a value fund, we don't put NVIDIA in it, for example.
All right. So, Linda, if I'm not long these Magnificent Seven or however many names are in there, where do you guys suggest investors go these days? Do you go to industrials, you go to financials, energy? Where do you guys see opportunity?
Yes, well, some of these names or sectors are some of the ones that we do have overweights on. It's just really hard to bet against technology. And technology, the tech sector has been the leader in the last 1, 3, 5 months. Year to date, it's been the top sector. So you really can't avoid it. And I would like to emphasize, though, we think there's great value in large value. There is unbelievable value in small caps. It's really hard to go against the wind here. And as versus the internet bubble, which did burst at a moment when everybody bought a handful of names, the four horsemen back in that day. Today, the top 10 names in this market represent 37% of the market cap, far and away more than the 26% back then, but also 31% of earnings. These companies are fabulously profitable. But if you own those 10 names, which we're not saying that you wouldn't necessarily want to, remember that they're kind of concentrated in what they do. 5 of the top 10 names are among the top 10 customers of NVIDIA. So, that's all your eggs in one basket. So to the extent you're a long-term investor and you can spread out these cyclical names, the sectors that you just mentioned are inexpensive. And you find a lot of great companies there.
Valuable. Linda Dissel, thank you so much. Greatly appreciated. Thank you for the comments on Mr. Auth as well. Linda Dissel from Pittsburgh with Federated Hermes. I read the article very carefully, and I just was, I remember there was a point after Pittsburgh blew up. I mean, horrific in 74, 75 and all that. I remember the nascent comeback, and, they redid the city and with the leadership of Pittsburgh and Carnegie Mellon, and as Linda mentioned, the health thing, but I guess now it's just like the intelligent place to live.
Yeah, it's interesting. As a sell-side analyst, Pittsburgh was on the rotation. You had to go to Pittsburgh to see Federated, to see Duquesne, to see that they had a bunch of smart money. PNC was there, a big money management firm. So it's been a nice financial stop for a lot of folks. And now there's, as Linda was mentioning, they got a lot going on there. I heard great things about it.
I tried to be nice to Stuart Hoffman for years just so I could, watch McCutcheon and the rest of the Pirates play. Yeah. I never got to sit in the PNC tickets.
No.
I'm sure you did.
Oh, yeah, of course. I wouldn't go there if there wasn't a Pens game or Pirates game.
Yeah,
Same thing for like Cleveland, Cincinnati. If you're going to send me to the, some of these cities,
you got to wrap it around the sports schedule.
Yes, exactly. So
now, if I went to Toronto and happened to see the Maple Leafs in the third row the night before my speech,
I do it Tuesday, Thursday. Tuesday in Montreal and Thursday in
catch the Canadians.
Catch the Canadians and
brilliant. Welcome to our world, folks, from New York City, Bloomberg surveillance.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the markets going to react? Because we had some more economic data out this morning. We learned initial jobless claims fell by 5,000 to 238,000 last week, and that was from an upwardly revised 243,000 that prior week. And new home construction in the U.S., it slumped in May to the slowest pace in 4 years. Building permits, well, they're also at a 4-year low, too. The markets are open, so let's get started with the S&P 500, up about 0.1%, 10 points at 5,497. We have the Dow, little change, down by about 19 points at 38,810. Then we have the NASDAQ, that's up about 0.3%, 50 points at 17,912. The 2-year yield, 4.75%. That's up 3 basis points. The yield on the 10-year, 4.28%. That's up 6 basis points. Over to commodities, we have spot gold higher at $2,340 an ounce. We have NYMEX crude, $82 a barrel. Brent crude at $85 a barrel. At the open, also want to check in with NVIDIA, up another nearly 3% right now. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. This is a very strong half hour we've got for you opening up. We're going to talk to a leader in equities right now. And then your distressed non-retirement program. You got a 501k. I don't even know why you're here, Paul. Just retire.
I've been throwing money into that thing forever.
I know. I'm in triple leveraged all cash. I've missed the boat, of course, going to Kelsters. We got a wonderful special guest coming up here at 9:45. He will retire, which is unthinkable, in 14 days. Christopher Ellman joins us now, the high-energy CIO at Kelsters. They run $17 trillion or whatever out in California. Don't give me this BS retirement stuff. Chris, which hedge fund are you going to? Are you going to go work for Citadel?
Thanks, Tom. No, not at all. I am going to go work for myself. I'm going to retire and slow down, but do my own Ellman advising. Just work with a few people.
I saw a thoughtful article a while back. It was mostly on Europeans' love for fixed income and finding a coupon. Even now with this strange equity market, on an institutional basis, are we too bond and coupon centric where we need to believe in America, capitalism, and equities?
You know, Tom, I think we are too NVIDIA focused. I do want to talk about bonds. I mean, 420 isn't a great yield on the 10-year, but look, you guys talk about it all the time. Paul swims in a pool of muni bonds. That's not bad for the average investor. And I think people need to diversify away from this narrow equity market and own global equities, but then own fixed income.
So, Chris, for the teachers, the great teachers from the state of California, where are you finding yield in the fixed income market these days?
Still in private credit. As much as there's money flowing into that area, I think that it really still offers a decent yield because it's variable rate. And then, credit, high yield actually had a really good run this year. After you look at the tech stocks, the next level of solid returns is coming out of the corporate bond market. So there are opportunities. You're not going to hit a home run. You're not going to go up 3% a day like NVIDIA. But hey, come on. After those 10 stocks, your other guests from Federated just talked about it. We've got to look at a diversified portfolio. You've got to own more things. And I've been telling people, especially retail, they've got to look at their mutual funds. Every mutual fund owns the same stocks. It's crazy. So diversify away, own some bonds, buy in some corporate, some high yield. You're going to make some decent returns, and decent returns are okay.
And Chris, how do you think about the global outlook here? I mean, we hear a lot about U.S. exceptionalism in terms of the economic growth out there relative to other parts of the world. Is that also true for investment returns? How do you think about the U.S. versus non-U.S.?
Yeah, in 2024, the U.S. is still ahead. Non-U.S., though, it's really surprising that Europe did so well. It's starting to falter here in this summer. And I know, Tom, you don't like me to say summer doldrums, but Europe is definitely in summer doldrums already. They had a really nice run in the first half of the year. Japan really should be poised for growth. And I think that's another area to look for diversification. But it has been the U.S., and it really has just been these narrow names at the top.
Not so long ago, Chris, you guys exploded your private credit allocation from 0% to 2%, dipping his toes in the water. Tell us your thoughts on the illiquidity, almost venture capital-like internal rate of return collapsing illiquidity of private equity and maybe private credit. Are you worried about it?
I'm not, Tom. Private credit really is taking the place of all of those banks that used to borrow, now that are loan into that market. Now that Basel III is coming out of Europe, that's really going to make the banks step away even more. So as long as you're doing your underwriting and paying attention to your covenants, that's a decent place to be. I'm seeing a lot of institutional investors, when they look at their Bloomberg aggregate index, they're pulling out the corporate credit index and plugging in private credit. Now, that's completely different than private equity. Private equity right now is frozen. It really is. We're not seeing Merger Monday. We're not seeing any activity. And the GPs are just sitting on these companies. They claim they're doing well. I mean, look at the jobless claims.
Oh, come on, baloney. We've all been here before, Chris. Come on. You accurately state they're sitting on their hands, right, Paul?
Yep.
We can all agree on that. What's a typical
100%.
markdown? What's a typical markdown X years out when private whatever is sitting on their hands?
Tom, it's really going to be related to the public markets. And look at the jobless claims number today. The 4-week average is so low. These companies are making money, just like the broad market, not making a ton, not growing a ton, and they're not having the opportunity to sell. So I think private equity last year was flat for us, while the equity market was up. This year, it really should be flat again while the equity market is up. That's your write-down.
So, Chris, if people are looking for some diversification away from maybe the Magnificent Seven in the U.S. equity markets, where do you think they should be looking?
Anywhere.
Yeah.
In the U.S. equity market, your last guest nailed it, which is small cap, mid cap. They're undervalued. Heck, they have been undervalued since the pandemic. They really haven't gone up a ton. PEs are a little bit rich in this market for my taste because I'm a long-term value investor, but I think you can diversify away in your portfolio, and I think you should. It's great to own technology, and it is all very interrelated in the economy, but we're over assuming what AI is going to be capable to do. And we've all been in this market a long time. Market always overshoots. It's always over optimistic at the start. AI is not going to clean your house. AI is not going to fix your car.
Right.
AI is going to write a paragraph for you. So let's recognize what the technology will do, and let's be more realistic.
One final question here, Chris. Have the politicians, California, wherever, with the failure of ERISA in 1974, have they got religion that they just have to say to people, you got to invest as much as you can in your retirement? We're not going to play rich, poor, middle class, whatever. Is there a new religion among politicians to get our system fixed?
No. Larry Fink hit it right on the head that we do have a retirement crisis coming. The baby boom generation, which I'm part of, is definitely going to outlive their 401ks. And we're going to realize that it's better for society to aggregate longevity, aggregate the assets, let professionals manage it. So we're going to have to go through this like anything in America. We have to really experience some tough times before we make changes. Hopefully the politicians will see the value, but the 401k experiment, I think, is going to show us that it doesn't work. People can't manage their own assets, can't put enough money away.
Wonderful. Congratulations from all of us at Bloomberg.
Yes.
Mr. Edelman, congratulations on a responsible voice of institutional Wall Street, to say the least.
Yep.
I still don't believe he's going to read. I'm not going to say the R word. I just don't.
Exactly.
I don't.
Yeah, Chris Edelman doesn't retire.
It's probably going to go save Paramount. I can see you doing that.
They could use the help.
Chris Edelman, thank you so much. Greatly appreciate it. Running green on the screen, NASDAQ lower than the futures earlier. NASDAQ up 0.2%. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and Lisa. North Korea state media say the new agreement between Russia and North Korea reached by their leaders requires the countries to use all available means to provide immediate military assistance in the event of war. The official Korean Central News Agency reported the language of the partnership agreement reached by its leader Kim Jong-un and Russian President Vladimir Putin in Pyongyang. Former State Department official Colonel Steve Ganyard says the traditional response of international pressure isn't as effective as it used to be.
There's really not much we can do about it. These are two pariahs. We really have no diplomatic means of influencing either country.
Colonel Ganyard spoke to ABC. Putin is now in Vietnam to strengthen ties with its longtime partner in Southeast Asia. There's new tension between the White House and Israel. Prime Minister Netanyahu is accusing the U.S. of withholding weapons from Israel. Biden administration officials are said to be outraged, calling Netanyahu's comments beyond the pale, pointing out only one shipment of bombs was paused due to concern about their use in densely populated areas of Gaza. Louisiana has become the first state to require the Ten Commandments to be displayed in every public school classroom from kindergarten to college. The ACLU and other groups are vowing to challenge the law, which takes effect next year, citing the separation of church and state. State lawmaker Royce Duplessis said he expected legal challenges.
We learned the Ten Commandments. We went to Sunday school. And as I said on the Senate floor, if you want your kids to learn the Ten Commandments, you can take them to church.
The U.S. Supreme Court struck down a similar law in Kentucky in 1980. Tropical storm Alberto is rumbling toward northeast Mexico as the first named storm of the season, carrying heavy rains that left 3 people dead. The region has been suffering under a prolonged severe drought. Texas also hit by Alberto. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Mike LaBar, and this is Bloomberg. Tom, Paul, Lisa.
You know, Michael, I'm looking at you, and I'm just thinking a 6-year, $78.5 million contract. And, you know, if Lisa decides she doesn't like you, you can leave after a year, and we still owe you $65 million.
The timing of this, I don't understand now.
The Detroit Pistons were the worst team in basketball.
And yes, and I get why Williams was let go. I get that part. But you wait until now, until we're coming up about just a few days out from the draft to do this? I don't get it. And then you're on the hook for all that money.
We remember Bob Lanier, the heritage of
Yes.
it, just the absolute magnificence of it. How much of a reclamation project are your Detroit Pistons? 5-year project?
At least, well, I'm going to be nice.
Can Monty go do? Wait. Can Monty go to the Los Angeles Lakers?
Yes. Exactly.
It's going to take a while, but again, I don't understand the timing.
6
I get why he got let go, but saying that too, this really wasn't his fault. He had a mess to begin with when he came in there.
He was at Phoenix and he was very successful. But it's
sorry.
like Texas A&M. They had this huge contract. It was bigger than the one Jess Benton had when she was there. but the answer is, when are they going to learn they can't lock in coaches for umpteen years?
Well, I think they can, because they just pay. I mean, there's always money out there to pay these guys.
This is TV rights. It's just a conduit from TBS over to Monty Williams.
The money's always there in college sports. It's become, as we all know.
Michael, you missed your calling.
Yeah.
Yeah, I sure in the heck did. It's like, all right, guys, dribble. That's it. There you go. That's my coaching, man, and I can make all this money. And they're on the hook for all of this money too. Yep. I didn't understand it when they signed him for that much money to begin with.
Exactly. Yeah.
I'm sorry. I've said too much.
We got to, folks. We don't really care about this. It's just in Michael's agreement, we have to talk Detroit like every third day for 4 minutes, or his people have a tantrum. That's what it is. Detroit Pistons unload their coach. They still owe him 60. What's that? It's like 2 Taylor Swift concerts.
Yeah.
That's what they owe him. Green on the screen across the board. Dow up 26 points. It's a lift to the market. NASDAQ up 0.3%. The VIX stable, 12.70. I'm looking at the 10-year real yield, 2.05%, a little bit higher yield. It's just like it's like a Thursday. I have to keep reminding myself, it's Thursday out there. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got all green on the screen right now. We have NASDAQ future, the NASDAQ up 0.3%, 64 points at 17,926. The S&P 500 up 0.2%, 16 points at 5,503. The Dow up 0.2%, 81 points at 38,915. The 2-year yield 4.75%. That's up 3 basis points. A 10-year yield at 4.28%. That's up 6 basis points. Want to go over to currencies? The dollar edging higher against a number of currencies. That includes the Japanese yen, euro, British pound, the euro 107.26 against the dollar. Shares of Dell Supermicrocomputer, they are higher this morning. We have Dell up more than 7%, Supermicrocomputer up more than 9%. And this is after Michael Dell, he posted on X saying that Dell is building an AI factory with NVIDIA to power xAI's Grok supercomputer. Then we go to Kroger, their shares up more than just a fraction right now, but about 0.1%. Sales topped estimates, consumers continuing to spend on groceries. And finally, Darden restaurants, they're up about 0.5% right now. That's the home to places like Olive Garden. You know it. It reported guidance that missed estimates, but here's the thing, it beat on profit for the latest quarter. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. I want to make clear that sometimes I do this spur of the moment. This is a book from 3 years ago. And they said to me, Wooldridge is in the building. What should we do? And I said, cancel someone. Let's just get him on. And we are thrilled to bring you Adrian Wooldridge. And with all the madness going on in politics, this is instantly one of my books of the summer. The Aristocracy of Talent, How Meritocracy Made the Modern World. American warning, it's dense British writing. Get over it. It's absolutely phenomenal. Paul, in the introduction here, Adrian is writing for Bloomberg Opinion. Democracy is in retreat. Liberalism is struggling. Capitalism has lost its luster. Okay, over that optimism, Adrian, let's begin here. Is Sir Keir Starmer the second coming of Tony Blair? Let's start there.
Yes, he is the second coming with two qualifications. One is that he's likely to get a bigger majority than Tony Blair got in 97. And second, that he's probably to the left of Tony Blair. Not a long way to the left, but to the left of Tony Blair.
Can they commit policy? Can they execute law? I'm reading David Gilmour's Kipling right now. And basically, they had to have a war, World War I, for everybody to grow up. There was total chaos in like 1890, 1900, liberals, unionists. We don't have to go into it. But the answer is, in the chaos of United Kingdom, can the Labour Party bring stability?
It looks as though the Labour Party is going to get such a big majority in this election that they'll be allowed to do whatever they want. Can they bring stability? I think they probably can bring a measure of stability compared with what the Tory party did, because the Tory party was completely divided over Brexit. It tore itself apart, and you had chaos. I think the Labour Party is pretty united. Keir Starmer has enormous power as well as authority over the party, and he has a fairly sensible centrist set of policies. So I think we're getting in for a period of stability in Britain, and the business community almost entirely has shifted from Tories to Labour because it wants stability.
So, as you mentioned, Adrian, it looks like the Labour Party is going to win a big majority, which in your column yesterday, you say that you asked the question, how did the world's most enduring right of center party come to the edge of catastrophe? What's the answer to that?
Well, the answer in my column is obviously Brexit tore it apart, but I think I try to present a slightly more sophisticated answer, in the sense that I think what Brexit did was to turn a party that had been based on Edmund Burke, his theory of good government, moderate government, to the party of Rousseau, which was the party of the general will, which is ultimately a very, very revolutionary, very anti-conservative thing, but that's what we got.
Tottenham won the last time Edmund Burke was in charge.
So, Adrian, I mean, just for us Americans, I mean, we are all in on Brexit just because it was such day to day for such a long period of time that we even got into it. If that referendum were to be held today, what would happen, do you think?
Brexit would lose, that we would remain within the EU. But on the other hand, we don't have that choice again, because if we want to rejoin the EU, we'll have to rejoin on very different terms. We'd probably have to take the euro. We had a very good deal, and we threw it away.
But is Starmer going to de-Brexit? I
No.
mean, that's the heart of it. How can he not do that? He's got to find a few little victories here for his left.
That's a very good question. I don't think you can de-Brexit, partly because the country just doesn't want to hear it again. But what you can do is you can edge closer to the European Union. You can move into the single market or the customs union, or you can create a closer relationship. The Tories, there are various different versions of Brexit. The Tories went for the very hardest possible version of Brexit. You can get a softer version of Brexit, but I can guarantee to you that Keir Starmer will not mention the word Brexit for a very, very long time. But let me just underline the fact that the latest opinion poll that's come out today, came out yesterday, sorry, puts the Tories on 53 seats. This is a party with a big majority. I mean, that's a historical collapse.
Out of like 700 seats or something? How many
out of 650 odd seats, yeah.
And Paul, we need to explain here, and I don't want to make it a civics lesson. It's too important to have Adrian Wooldridge here. But the Prime Minister of the United Kingdom may lose his seat.
Yep.
That's
it's
correct.
not like America.
Yep. So we talk about maybe edging back towards Europe. The business community presumably would prefer that. How about the Europeans? Do they want the UK edging back closer?
I think they're divided.
Okay.
I think definitely the northern Europeans, countries like Denmark and Sweden, are very keen on Britain, partly as a counterbalance to the power of Germany and France. I think the French and the Germans would be much more sceptical about it. But the point is that they don't want us going in, then going out, then going in, going out.
Yep.
They want an absolute commitment. So I just don't think that this will be at the centre of politics for some time. But another thing you have to remember is under the British system, there are no checks and balances. If a Prime Minister wins an election with a big majority, he's completely in charge. There's no constraint on what he can do.
You co-wrote a book with a guy, John...
I can't remember his second name. It doesn't matter.
John, I can't... Micklethwaite. Yeah, there it is. Adrian Wooldridge, John Micklethwaite, The Wake-Up Call. What's the wake-up call you see in the American election coming?
Well, there's no direct comparison, because I think that the base Trump support is bigger than the base Conservative support at the moment. But what it does show is if you have a long period of ill-disciplined, chaotic government, eventually people get really, really angry with it. The Tory party won a reasonable majority, a majority of 80 seats in 2019. They were doing quite well, but people just got sick of the chaos. And I think that's a real warning for the Republicans.
So if we do get a big Labor position in this election, what will the leadership do? What will the Labor Party do? What did they need to do?
What do they do day one? Yeah.
What they do day one is say, thank God we've got rid of those people, and everybody's happy for a while. But I think what I see with the Labour Party is not a particularly ideological party, but a party that's really dedicated to getting a certain set of things done. Their priority is growth, and their priority is doing things to create growth, such as planning reform, improving the machinery of Whitehall, setting clear goals and achieving them. So I think it'll be a very pragmatic, incremental, disciplined party. It'll be much less exciting than Tony Blair. It'll do much less innovative things than Tony Blair. But it could be exactly what Britain needs for the moment after a period of chaos and, quite frankly, lack of focus. We've had, if you're Minister of Education for 2 months, you've served a long time. You get a long service medal. I mean, we need to restore some sort of discipline to the process of government, and Starmer wants to do that.
Don't be a stranger. Adrian Wooldridge, thank you so
Thank you very much.
One of my books of the summer, The Aristocracy of Talent, from 3 years ago. It's a dense, really, really focused and good read on where we are heading with our meritocracy made the modern world. And of course, we'll have our full election coverage from London. We'll have our full election coverage from France.
These notes are long here. I mean, man, you.
Adrian, it's like the New Statesman.
I just subscribed to make sure I get all of Adrian's stuff in my inbox, but holy cow, I'm
Adrian Wooldridge broke ChatGPT.
Exactly.
He punched it and it blew up.
Yeah, he doesn't say, give me 500
words
on
great?
Brexit.
He's working on a biography of Joe Cocker.
Oh.
That's great. Adrian Wooldridge on Joe Cocker. Leonard Cohen, Take Manhattan. Then Berlin, good morning.